A $20,000 Ethereum is in the playbooks, everyone. Now, I know what you're thinking. How is this possible? The gas fees on the Ethereum network are so high, right? You need at least a couple $1,000s to make it even worth it, because the average transaction cost could be around $50, if not a lot higher. I've seen at least a couple $1,000s. And I totally get that. So we're going to go into this, and then we're going to talk about why I'm bullish on Ethereum. Take a look at the charts and then my price targets. My name is Sean, and welcome to Invest with Fire. If this video is helpful, consider liking and subscribing and hitting that notification button to be notified when I put out a new video. Vitalik Buterin, one of the founders of Ethereum, is proposing to basically implement a couple of temporary solutions to help address the high gas fees right now. Now, this temporary solution is called EIP 4488. And what this does is that he wants to implement some of the roll-up solutions right now versus releasing them all at once. Now, this is good and bad, right? This is going to lower gas fees because the way you can think of it is that you're going to basically be able to zip your transactions and compress the size of these transactions. However, the downside is that it would actually increase the maximum block size. Now, this is bad because it makes Ethereum less decentralized, because you basically need more memory and more hard drive space to store these transactions, right? Imagine storing like 10 terabytes of just data on your hard drive, right? I mean, that would kind of make it hard for a lot of people to be a node in the whole Ethereum network. However, this is not really a huge deal because these network fees are just incredibly high, right? And there just needs to be a solution to address this temporarily for right now. And this doesn't really matter in the end because Ethereum is transitioning to Ethereum 2.0, in which they're going to implement various sharding and roll-up solutions to help lower the gas fees and process more transactions per second. And if we take a look at this tweet right here, EIP 4488 is actually going to lower the cost by 5x. So this would be great. And also, everyone can see what these roll-up solutions are going to do for the network and help process these transactions and lower gas fees. I don't know if everyone understands that Ethereum is transitioning to Ethereum 2.0 right now. So in this transition, yeah, there's going to be some bumps in the road, right? Ethereum is going through its awkward teenage phase right now. And that's why we have all these high gas fees. But even with all these high gas fees, you cannot deny the fact that Ethereum has basically the entire DeFi market. So if we take a look at DeFi Llama, you can see here all the money that's actually on these different cryptocurrency L1 solutions. Now, if we looked at the total value locked for all these chains, we could see Ethereum, right? Ethereum has $183 billion locked on its chain. Second place is Binance at basically $20 billion. Solana is $15 billion, Avalanche is at $13 billion, right? And everyone's bullish about these chains right now. And if we also take a look at this chart, we can see here, Ethereum is losing market share, right? Ethereum was at 97% back in January 1st, 2021 right here. And you can see that Ethereum is losing market share. And this is totally a valid concern, right? Ethereum is losing market share. However, my question is that, let's just say Solana had the same total value locked as Ethereum. Would it be as decentralized as Ethereum? I don't think so, right? If I pull up this news story over here, Solana network was shut down for several hours because they had something go wrong with their network. And this also says something, right? That there's all this value locked in Ethereum, even besides all these high gas fees. And that's because people still value decentralization. And this is why Ethereum has high gas fees. Ethereum could lower gas fees in an instant, but they're choosing not to because they understand that decentralization is very important in the cryptocurrency space. And they're basically trying to become the de facto chain for all the smart contracts on the chain. Now, how can all these platforms build on Ethereum if they're not decentralized, right? Because if they're centralized, then they can be easily manipulated. And this is what Ethereum understands. So Ethereum prioritizes decentralization right now. And that's why they have all these gas fees. But they are doing things to address these concerns. And with Ethereum 2.0, all these concerns will be erased. Now, Ethereum 2.0 is coming closer and closer. And this is going to be great for the price of Ethereum because Ethereum will now become deflationary. And so what this means is that the price of Ethereum will go up, right? Each Ethereum will become more scarce. So when something becomes more deflationary, especially an asset like Ethereum, that means the price is going to go up. So in this merge, Ethereum is basically going to transition from a proof of work to a proof of stake consensus mechanism. And this is going to help address all the energy concerns of Ethereum, right? That Ethereum uses too much energy. So this is what proof of work is going to solve right here. Now, this won't do anything for the high gas fees, but will definitely help with Ethereum becoming more scarce and making Ethereum one of the perfect assets out there. So the next bullish thing I want to talk about for Ethereum is that this investment firm Cali files for Ethereum futures ETF. Now, the futures ETF is not the perfect thing because there's a lot of fees involved. It involves the future price of Ethereum. And what we want really is a spot ETF. This is a step in the right direction. And this just shows the demand for Ethereum. So this is very bullish news. If this actually goes through, then a lot more money is going to come into Ethereum. And when the spot ETF comes through, even more money is going to roll into Ethereum. The next thing I want to talk about is that Kathy Wood says that Ethereum clearly satisfies a huge unmet need. And she talks about how basically ARK's investment is 40% of their cryptocurrency investment. And that says a lot. If you understand ARK and know all the research that they do behind their investments. I like this quote right here. This hunger for yield is being satisfied by a much more efficient financial ecosystem, she said, referring to the growing world of decentralized finance. Now, this is very bullish. This just shows why there's all this money coming into Ethereum right now because everyone's chasing yield and they understand the value of a more efficient financial ecosystem. Now let's take a look at the charts. So Ethereum is trading at $4,555. It's having a little bit of a dip. Dipped down about negative 1.64%. Now, I noticed a lot of lines on this chart right here. So these two red lines, they signify the fourth quarter. And what I did is I took a look at all the previous fourth quarters and I basically calculated what was the average percent change of Ethereum. And so on average, Ethereum went up by 26% for each fourth quarter. And after the fourth quarter, I also calculated and measured how long does it take for Ethereum to reach its peak. And so it took about 141 days on average. And Ethereum went up by at least 252% after each fourth quarter to its local market peak right here. Now, this won't always play out, and this is just based on averages on what Ethereum has done. But even with all this bearish news, right, people saying, the gas fees are too high, they don't support Ethereum anymore. Well, Ethereum is close to all-time highs right now. How can you say the network's going to die? We're pretty much getting close to all-time highs. And now even with like these little dips right here, this is nothing. So if we take a look at the averages, if Ethereum were to actually increase by 252%, this would give us a $15,000 Ethereum right here. Now this is assuming that Ethereum goes up by 252%. So if we take a look at these charts right here, so these are my, this is just a bar chart, basically the average return of Ethereum, just like I talked about. So you can see here that the averages are going up. So the post fourth quarter performance to peak, you can see here back in 2018, 147%, 2019, 280%, and then 2020, 483%. Now, if this trend continues, this is where I can see a $20,000 Ethereum. So if we take a look at this table right here, this is basically the same information. I'm going to zoom in. So Ethereum's performance after the fourth quarter, you can see here, right? We definitely see a trend upwards right here, right? And the percent change right here, right? The percent change from the previous year is 48%. From 2018-19 is 90%. And 19 to 20 is 73%. And on this table down below, I calculated averages, and I also looked beyond 2017 because I said 2015 and 16, the performance was insane, right? These are in the 1,000% right here. And that's when Ethereum was a lot smaller, and the cryptocurrency network was a lot smaller too. So, but since we have so much more data, I just used from 2017, And you can see here on average, Ethereum went up by 252%. You know, if we took the entire period, it would be 1,396%, and that's why I didn't take it. And on average, total is about 27% change during the fourth quarter. If I were to take after 2017, it would be at least 46% change during the fourth quarter. Now, $20,000 Ethereum. Now, of course, this isn't financial advice, but I'm just looking at the previous trends of Ethereum and looking at the percentage change. So we can see here, scenario one, price target. Ethereum is $16,252. And so this means that the post fourth quarter performance to the peak would be 252%. So if I plug in 250 right here, you can see the actual percent change from the previous quarter went down almost 50%. Now, do I see this actually happening with all the bullish news and all the money coming into Ethereum's network? I don't think that's possible. But to be conservative, my price target is at least $16,000 for Ethereum. Now, let's just say if I were to plug in 300%, right, performance after the fourth quarter, this would be a negative 38%. Now, if I put in 350, a 350% change, Ethereum would be $22,750. Now, let's just say we input 400%. The price target of Ethereum would be $26,000. And this 400% would go in line with the trend that we've been seeing in the previous years right here. So I can see 300% definitely happening. But again, just to be conservative, my base target is at least $16,000. But a $20,000 Ethereum is not out of question. If you look at these trends, right? I mean, the numbers say itself. If we look back at the charts, right? 147, 280, 483%. I mean, at least 300% is possible out there. So this is why I could see a $20,000 Ethereum. So my question to you is, can you see a $20,000 Ethereum happening? What's your price target for Ethereum? If this video is helpful, like and subscribe. I'll talk to you guys later. Thanks. Bye.